Good morning, everybody. Kirk Spano. It is September 29th, 1 or 2 days, I think 2 days to the government shutdown potentially. And I have a couple of announcements ahead of that, and I want to cover some things today. First of all, if you can see it over my shoulder, the Wes Helms Memorial Trophy is what we call it. That is the fantasy baseball trophy, traveling trophy for a league that I've been in for 25 years. And I am no longer the champion after yesterday. I successfully pulled off a first to worst in 1 year. So I won the championship in 2024, and I made it all the way to last place this year, mainly because I traded away a bunch of draft picks and I just never got my team set up well this year. But I wanted this to be on screen just so people could see it. So there you go, the Wes Helms Memorial Trophy. If you're a Brewer fan, you will know who Wes Helms is. He was a Brewer who, he was a hero for, I think, a month. In any case, I am going to be changing the time of this meeting to 11 a.m. So I'm going to start 1 hour later starting next week. It's just kind of not enough time for me to get ready on a Monday morning with this. So I'm going to move this just 1 hour. If you're on the East Coast, you should be able to get me during lunch. If you're on the West Coast, be a little bit later, so you've already had your coffee. And why don't we get started here? We are going to, somebody liked that news. I saw little hands clapping. I want to cover how I'm keeping track of stocks and ETFs. I have some expensive tools, but I really just think there's a couple of cheap ones that you can use and get most of your work done, along with the information you get from your brokerage research section. So this is the Seeking Alpha Premium Stock Screener page. And they have a bunch of screens on here that are good starting points. They are all built around their quant ratings, which are, it's just a momentum-driven strategy, which is okay. And what I do is I take these screens and then I change them. So I have a bunch of my own screens, and let's take a look at mid-cap stocks since that's my favorite. I just change what the scores are. So if you go into this edit section, you can pick out different things. I take sector, industry, market cap, the ratings, and then the quant factors. And what I do is I adjust all of those so that I'm just kind of cutting off one end or the other. So with growth, I want it to be above average growth. Profitability, I don't care about because every company's going to have a different story. Momentum, I don't care about because I can pick from either side. EPS revisions are important to me. I want a company that the analysts are bullish on, and then I want pretty good forward-looking revenue. So when I take a look at this, it'll rank stocks for me that fit in here. 90 mid-cap stocks fit the criteria for the market cap, and I will generally rate by EPS revision or by growth. And I'm looking for disparities between the growth and the revisions versus the valuation and the momentum. So a stock that hasn't gone up a lot, so a B- on momentum, means probably still has room to run, unless the valuation is already crap. You can start taking a look at these and you just go through and say, okay, what's the story that I'm looking for? So Appfolio, this one's been grinding along. I don't know anything about the company, but from a technical standpoint, you take a look at it and you say, well, look, it's kind of just been grinding higher for a long period of time. So that might be interesting to me. I have to study the company. And then I decide, well, is it going to take a sharp turn up, or is it just start chopping sideways, or have some sort of ending pattern that brings it back to this level, right? So this is resistance. It touched resistance. Is it going to touch resistance again around 265, 270? And then would it break down below that and get all the way down here to this support around 200? You have to do the reading. You have to know what's going on with the company and make your determination from there. One of the things I like is the long-term growth outlook. Not very determinative there, so they don't really know. The industry is about 15%. So for me to be interested in this company, I would probably need this to be growing significantly faster than 15%, which means that it would be beating its industry. And you can do that all the way through here, find companies that there's some sort of discrepancy, right? There's not a lot of momentum. So like these have some pretty good momentum and it's overvalued. So probably I'm not interested. If I'm a trader, I can chase it and I can participate in the short-term trade, but we're probably going to see a pretty good chart here, right? So there you go. It came off its peak. It's not super exciting to me. I would have wanted to buy it down here, right? People ask me all the time after a stock has done this, should I buy it? Well, I don't know. You would have gotten a much bigger margin of safety if you bought it down in here, correct? That's the whole point of buying things closer to the bottom pivot point, is you are getting a bigger margin of safety. So probably not interested in them. I don't know enough about these guys. But you keep going through here. You see, okay, momentum. There you go, this one. Momentum is falling on Duolingo, which I've studied before. Valuation is very overvalued. Now, I'm using Duolingo right now to learn a little French and a little Italian. I know that they had a good run-up, and based on that momentum, that means they're probably falling lately. So let's take a look. So they had their correction, and they're just starting to come back up. So Duolingo right here, if you can justify the forward PE based on growth, they'd have to have a growth rate of like 40-45% to justify a PE this high. So let's take a look. Forward growth rate's 52%. So maybe Duolingo's in a good spot. It's all the way back down to the support from earlier in the year. But what is it compared to 5 years ago? Well, right there, that's a resistance level, about 250, breaks through over here, and then comes all the way back down to 275. So if it holds 275, 280, 290, that might be a pretty good spot to buy if there's one more dip. And what we would do is we would go over to Trading View and we would pull up the chart, Duolingo, and say, okay, what does it look like this one's going to do? That's pretty interesting trend. It looks like it's going to try to break out. It's got a little pull up here. That's our kind of our magnetic bar. Algo doesn't see anything. That's what this is. All chart patterns is an algorithm to look for chart patterns that we don't see with our naked eye. So this tells me that I need to learn about the company. Is the company going to keep growing at a hyper fast growth rate? My guess is no, because Americans don't really learn foreign languages. So I think that this is probably just an entry into a relatively crowded space that they marketed well, and I'm guessing that it probably chops. So I don't see a ton of upside with this company because, again, most Americans aren't going to learn another language. So, is this getting used a ton around the world? That's a question that I would have to ask. Is the rest of the world falling in love with this? Probably not, based on what I've already read. So I think that this is probably the beginning of the end of the run-up and not the pause that refreshes. Maybe it shoots way up here, but these fair value gap lines are pretty bunched up, right? They're not spread out like these down here. So going up to force its way through each fair value gap is difficult. Clearly can drop in big hunks. So this is a stock that I think is probably at risk to, round trip. I'm not saying that it will, but the way these fair value gaps spread out, I could see this one really falling off. 95 PE, even though the growth rate is high, that might be the law of small numbers from the beginning. So I'm not super excited. But I go through these lists over and over again, and I'm looking for divergences between the momentum and the valuation, the growth, and the revisions. The revisions have been pretty well established over the years to be important. Zacks is what their whole premise was based on. Nobody uses Zacks anymore because the information is out there. It used to be that they were early to the game and identifying that divergences in the direction that the analysts were going meant something. Well, now it's just another factor in the consideration. But if we do rank order by the EPS revisions, we can see that some of these might be worthwhile. So EPS revisions and growth are real strong. The valuation isn't horrible. This one, valuation isn't horrible. Valuation isn't horrible. Valuation isn't horrible. You just look for things. I think this one was interesting. Rubric. So you want to try to figure out, okay, it ran from here way up here pretty fast off of an IPO. Are they consolidating? I mean, that looks like resistance, and now it tested support. So what is the deal with this company? I don't know what these guys do. Not enough history. But if you take a look at this company, the chart is telling you do some reading. So fast growing cybersecurity stock. So again, I believe they made my list earlier recently, but I haven't done all the reading, and I think that it's important that we do all the reading. All right, go over to TradingView, and I want to take a look at some of the screeners on my growth stocks. So the growth stocks, remember, I rank by oscillator rating using weekly technicals. This is not a daily RSI. This is the RSI from the end of the week. So every week we get a new reading. I'm not worried about short-term trading. If we wanted to make this daily, we could trade it, but I'm not a short-term trader. So we rank order by oscillator rating because you really want things that are rated by, or you can get exciting and you can find neutral ratings that you think are about to turn into a buy. And you never want anything where the oscillator is rated as a sell, because that means that things are starting to deteriorate. Again, you're looking for divergences. So with Arrow Group, which I have up, this one was IPO'd recently, and it's kind of been in a choppy downtrend. So you take a look at this and say, well, it's kind of near the bottom of its downtrend. Yeah, it looks like it could get into the middle teens. And I think the question you have to ask is, the hell is Arrow Group? What are they doing? Well, Arrow Group is the company that makes drones that NATO has been buying because of the war in Ukraine. But I think given the various Russian incursions and NATO basically doubling their spend on defense, that this company, which has contracts with NATO, probably is a pretty good bet to continue growing. So when you take a look at the company, you find out, well, they have a joint venture to expand production. They got a $30 million contract, which is not huge. They got a $30 million contract with the U.S. Navy, and they have a program to develop drones that carry 200-pound, 300-pound packages up to 200 miles. Now, people get excited about that package delivery thing. I don't think it's a huge business, and here's why. If you take a look at least it's not a big business in the United States, I don't think so. Take a look at what Amazon has done. They can ship something almost anywhere in 2 or 3 days, and most people are happy with that. A lot of things, if you're in a city, you can get overnight. Sometimes you can get it the same day. So there's not a lot of need to up the expense with a drone and all the headaches that come with trying to get permission to fly a drone through a city. So the business is going to probably be lower volume but higher margin, for example, rather than flying something that you want at your house. They might fly an organ from one hospital to another. Right? I think it's going to be high margin stuff that these commercial drones do. And this company is probably going to be a leader, one of 2 or 3. They have the software and the training and the intelligence, the AI-driven models that other companies don't have. They actually have a technology edge. In fact, their drones in the field, even when GPS is blocked, can still hit their targets. So this is a pretty advanced drone company, and the insiders still own a big hunk. I've been selling cash secured puts on it pretty aggressively. I have a small position, and I think that I'm probably really close to pushing this up to a half position. If any of my puts get assigned, it will get there. And it looks like the downside is only about $17.50. So I've been selling the $20 cash secured puts and the $17.50 cash secured puts that I put in the article last week. So I would take a look at this one, but read up on the company, understand what they're doing, compare them to the other drone companies, And what you find is that they're probably in the small group of winners, given that even if the war in Ukraine ends, it's going to leave a mark across Europe, especially with the drone and fighter jet incursions of the Russians lately. NATO's going to arm itself to the teeth. And, I don't want to speculate on what that leads to. Hopefully it's a peace based on strength. But the fact is they're gonna buy a lot of these drones and other drones and other military equipment. So I think this one's a winner. This says it can go into the 30s, so that'd be a pretty good rip. From there, who knows? We'd have to watch the company and see how they develop. One of the things that I'm going to add in the weekly stocks and options article is going to be a couple of trades. So you can look at Arrow Group as something that you might want to own super long term. I'm a position trader. I'm willing to sell stuff after a while. This is a stock where if it had some hyper rally, and I think that it could be a narrative driven stock, I'd probably sell into that rally. I don't see that this is a stock that would grow forever and ever and ever, right? I mean, hopefully we're not using the drones. Hopefully they just sit in warehouses and on trucks and under trees and wherever else they hide them. So this isn't like software that just keeps getting used and used and used on a subscription, which is one of our favorite models. But I do think that there's a pretty good trade here over the next few years, or maybe even just a few months. I mean, if suddenly the people on Twitter and Reddit and the trading rooms fall in love with this stock and they start talking it up, understand that I'm looking for tomorrow's narrative. The market, as I've been talking to you about for years now, very narrative driven. And that's why valuations get out of whack, is because the traders just trade and there's twice as many traders as there used to be. So if they fly this thing up into the 30s, I would probably just take my gain. In the meantime, I'm making huge premiums selling cash secured puts. So as we go through the list, MicroStrategy is still ranked by, let's take a look at these idiots. Now it's kind of been chopping along in the fair value zone. This kind of says these cross lines are kind of saying, hey, it's got to break one way or the other. Elliott Wave says it might come down to 145 from 320. I mean, that's a pretty good correction. I think that long term, this company is going to have major problems, but by then, Michael Saylor would have made billions of dollars and he won't care. So I think that MicroStrategy is probably a super high risk bet with limited upside. Again, look at how the fair value gaps start to compress together up here. That indicates a top. And then all these fair value gaps, the orange lines, are very spread out. That indicates, hey, it could really fall off a cliff. So you want to use your screener to try to find these divergences and understand what you're looking at. Here's one that we own, another drone company. Back when it was right in here, right? This is where we bought it, around about 8 or 9. Why did I tell you I wanted unusual machines? Because the fix is in, man. This is the company that I can't remember if it's Eric or Little Donnie. I think it's Little Donnie is on the board and he owns several 100,000 shares of the stock. I expect that at some point, this company, which is expanding its production in Florida, and actually has made a couple of pretty good partnerships. I think the Trump administration is going to give them a contract at some point. And given that the market cap of the company is fairly low and the contracts they can be given could potentially be as much as the market cap, I think this stock probably flies at some point. There's not a lot of history. If we take it down to the daily chart, which probably makes sense. I mean, here's your pattern. It looks like it's going to break out. Now, could just fall off a cliff. But again, I think the fix is in here. I think that Daddy Warbucks gives them a contract and it probably runs up to this target into the 20s. And again, not a stock that I think I would hold forever, but I'm willing to trade stocks if I can make 50 or 100%. And I think this is a stock where I can do that. In any case, you go through all of these. Serve Robotics, I think we're early on this one. I think there's probably a big digger coming before it's time to buy. push this back out to the weekly chart, right? Another newer company. There's a lot of risk in this one. So I don't think I'm too excited to buy it now, but I do think that delivery robots in cities are probably going to be a real thing. They are all over college campuses. So you have to consider the safety factor. Where are these robots not going to get molested? They have found some of these robots beat up and thrown in the alleys. That's not a joke. And really, it's not funny. It's kind of funny. The question for this company is, can they get through the ramp up cycle? Can they get through the early CapEx? Can they get through the adoption curve? And I think that probably this stock comes back quite a bit. I think for sure a couple bucks, but it might fall off a cliff, come all the way down to $3 a share. And if it comes back down in here and it looks like they're going to survive, what's the question you ask? When a stock is priced for oblivion, what's the only question you ask? Will it survive? So if I can get a will it survive moment, and I think the answer is yes, then I would buy the stock. Otherwise, I'm not too excited to buy it up here. So again, when you're using this, look for divergences, look for things that, one indicator says up, one indicator says down or sideways, and then try to figure out which one is right. I have my other lists here. We've traded Dow once recently. American Tower, interesting. How far down does this come? Well, not very far. If American Tower came down into in this range, I'd have to start thinking about it. So if it loses another 25%, then I'm pretty interested. I don't even think that this is possible. That's some sort of anomaly with the algorithm. Remember, they own 5% of AST Space Mobile. I don't think that's been realized in the share price. I mean, this is chopped along for 5 years. So if it breaks out of this wedge and has a deeper correction, especially down in the 150s, then I'm super interested. Notice that I'm not predicting what's going to happen. I'm just telling you what I would do if it happens. That ends up becoming a pretty easy pivot. You just go through all of these, So the oscillators have turned neutral on coals, even though they had that big rally. So is that big rally pretty much over? Yeah, I think so, right? It's round tripped from in here. It's back. So this is the overzone. So this would have been a good trade. We had been watching this stock and I just didn't feel like playing with it. I probably should have, but now I think it's just about done. I mean, they still have all the problems they've always had, slowing business. The real estate value hasn't gone up in a while. The debt, is still the debt. They're probably close to fairly valued, which is what I said when they were over here. They were close to fairly valued. And then when it dropped all the way down in here, I didn't pull the trigger. Maybe we should have pulled the trigger. So that's one of the things I'm looking for is a handful more 50 to 100% movers over 1 and 2 year time frames that we can do in the future, which I haven't done a lot of, but when I've done it, we've done pretty well. My concern is that we're running out of 10 baggers, at least for a while. There are so many stocks that have run up that, I really like to find a dozen potential 10 baggers every year, and if 1 or 2 or 3 of them become 10 baggers, you have a great year. Well, we had the Rocket Lab, we had the EST Space Mobile, which both probably triple or more from here. Ametis hasn't moved yet. Enovix is new for us. Some of the other stocks are new for us that I don't want to mention yet, but I do believe there will be a sunshiny day. So those of you who read what I've been publishing know who I'm talking about there. I think that I want to add a few more lower risk trades where we can make 50 or 100%. And if we had bought Kohl's down around, 6, 7, 8, right, this would have been a pretty good trade. Especially we could have just sold right here on that spike. You get 2 chances and it even went up above it a little bit. So if we had sold anywhere in here, could have gone, let's say we had bought it at 8 and sold somewhere in the 13, 14 range. That would have been a good trade, right? So I'm going to try to add a few more of these because I think the market's kind of demanding it. I'm still pretty bearish on the macro level. So in looking at the ETFs, There are definitely there are definitely ETFs that you could chase. So if you're a trader, a shorter term trader, we talked about silver a year or two ago, and it's had a pretty good rally. Now, the bulls here want to tell you that it has a ton of room. I'm not so sure. If you just pull this back, it's close to all-time highs. This was probably too high. Granted, that's a whole decade of money printing. So should it double? Should it go to 100-ish? Maybe, right? This line doesn't cross until up here. So I think there's probably more upside to silver, but it looks like a hard trade to me. You really have to be a FOMO momentum trader, right? You got to have those skills, probably using trailing stops on something like this. At some point, there will be that sharp correction. And then, and Elliott Wave is saying that it's coming. Now, would I buy this here? If it holds this support around 31, 32, right? Resistance becomes support. I could buy SLV here on the idea that it does have more upside and then treat it as a trade. So that's what you want to think about is, okay, do I chase it here or do I look at my technical indicators and say, okay, it looks like support will hold and I'll get, probably at least halfway to that support, but it might get all the way to 31, 32. And I think that makes it a pretty easy buy. And then you can ride it up. This is one that I've been looking at for a while. This is Saudi Arabia. It had a little jump right here. I forgot what the news was, but I think that Saudi Arabia's consolidation pattern is pretty interesting. A couple of things. Saudi Arabia, oil and gas, right? That's the easy story. The thing that's more nuanced is the fact that they are just gushing money, right? Saudi Arabia is hugely cash rich. So when they make their investments through the Saud family or however they're doing it, that money flows into their banking system and the rest of their economy. Their stock market is narrow, but it's also tightly held. So that stock market over there, as they invite other people to invest in it, it's really set up to do well. I believe that the price of energy is going to go up because capital hasn't been addressing it the way that it should in the last several years. Not a lot of drilling. The solar growth has been slower than it should be, even though it's fast. Battery technology is just getting there. We're not going to have nuclear anytime soon. So I think that Saudi Arabia really stands to do very well during the next rally. I think that Trump has made it very clear that he's going to work with them. And I really just don't see a lot of downside. I truly don't. So it's not like they can have the budget problems that we have. And even though things have tended towards a little bit more authoritarianism here, this is nothing compared to Saudi Arabia. So I just don't see a lot of risk for the investors, given that the investors are the ones that own the guns in Saudi Arabia. So I'm looking for an entry on KSA. There's not much of an options market on this, a little bit of an options market. If I can get this below 40 in that 37, 36, 35 range, I think I'm probably going to add a hunk of this because I don't want to pick out Saudi Arabian companies on their own. If I were, the one that you talk about is Saudi Aramco, but I think that's where they're pulling the money out of, not what they're putting the money into. And I want to be in the companies that are getting the money into them, not the ones that have the money coming out of them. I hope that makes sense. So anyway, I'm looking at KSA. It's the best ETF for Saudi Arabia. There's another one from Franklin. It's junk and it's super low volume. So if this comes back right in here, 38, 39, I'm going to probably sell puts if there's a market for it. Otherwise, from here to here, maybe 37 is what I'm looking at. And it can come all the way back down to this trend channel, but man, that would be kind of a no-brainer buy, I think, because this is headed up, right? So you take a trend line and you show your lows, right? So the odds are that this holds right in here. And I think it probably holds that. And I accidentally drew a pretty neat chart. So somewhere in here is where I want to buy it. Indonesia is another one that's always interesting to me. I feel like it can fall off a cliff. if the dollar goes up for a little while. And if the dollar does go up for a little while and it gets down in here, I'm probably buying Indonesia, right? It's really, I think that would be a classic shape, right? To buy it right in here. If we get a chance to buy Indonesia in the 15s, we're probably going to want to do that. So that's about 20% lower. This is as low as it got during COVID. This area here, could it get into the 13s? It could. Well, can I put those back? Yeah, a lot of my old charting. Look at that box. It's been just about right. Yeah, interesting stuff. Some of these charts I haven't looked at in a long time, but I think that Indonesia is probably going to have a lot of growth in the future. If we can buy the dips, we probably want to. So this right here tells me that maybe it comes back down to here, 14-ish. We'll see. But this is an interesting story. Look up Indonesia and then try to figure out why I'm kind of high on it. Malaysia too. So any questions? Somebody, Jamal, you're always kind of into the narratives. The obvious 100% trades, A, were never obvious, and B, there's always more. The market churns and rotates so much that if you're using some sort of tracking tools, and I just showed you two today, and with AI helping you keep track of companies, there's always more 50 to 100% trades. There really is. I am doing a global trends ETF update this weekend after the end of the quarter. I haven't really talked about the government shutdown. If it ends up being 4 or 5 days, it doesn't matter. If it ends up being 4 or 5 weeks, then we got a problem. Given valuations, I am still happy to sell lots of cash secured puts, collect the premiums, and not have to own anything unless it drops 10, 20%. So I think the cash secured put selling has absolutely been the best strategy over the last few years. It's just you're printing money. You really are printing money selling cash secured puts. So anybody who has said, I don't want to learn that, well, then just understand that you're choosing not to make money. Selling the cash secured puts has been a fantastic way to grind out some income, put some money into the accounts while you wait for other things to go well. I'm not really sure what you're saying there, Les. But yeah. Make sure you get into the chat rooms. I have changed fundamental trends a little bit. We are moving away from having as much swing trading at fundamental trends. There still is a swing trading chat room where Shooter hangs out, but I brought back the retirement income options, got rid of the rare. The rare is just for lifetime investors. It's just a way to get a discount. And the big thing is 1,600 of it goes towards consultations with me, and then you basically get a lifetime of the service. The two services, margin of safety and fundamental trends, are essentially the same now. The difference is that there's a swing trading chat room with Shooter, and he's going to cover a few swing trades each week. But after talking with my regulator, I've decided that I don't want to have so many moving pieces. And it really comes down to that. I'm not much of a swing trader. I do a little bit of it. I try to swing trade around my favorite stocks, not looking at the whole 3,000 stock universe and all the cryptos, because I feel like I get a better margin of safety by actually knowing what I'm invested in. So that's the way that everything is moving. I will add some more trades based on the universe that I'm familiar with. And it's a much bigger universe now because of AI. But I don't feel like I need to just scan the entire market every week. To me, that's too hard. I know that Shooter is insanely good at it, but I'm the one that's regulated, so I'm the one that has to cover his ass. And I'm going to stick with swing trades that are consistent with the things that I would want to own anyway. So if the swing trade doesn't work, time should fix things for me. So I only want to do swing trades on stocks and ETFs where time will fix it if the initial trade doesn't go well, right? So if I can't put the calendar on my side, I don't want to do it. I want that margin of safety. And I know that people who chase and trade can make money sometimes. Shooter is in the rare single percentage group of people who can do it. And he's got the energy and the time, I guess. I don't. If I did it full time, I'm sure I'd probably do it well. But the reason why I stick to a handful of poker tournaments versus sitting in a casino and playing cash poker 45, 50 hours a week is I just don't think it's the most efficient use of capital or time. And while I am very cognizant of how I use capital, how I use money, I'm much more cognizant of how I use time. Found out that a friend's wife is dying right now of cancer, and as I have every birthday, I realize that time is the thing that is most finite. So I want to get the best return on my time more than anything else. And short-term trading, I think, is hard. I think it's time intensive. And given that we have AI now that can help us do the research, right? Save us time of scrolling PDFs. I think that that's going to be the biggest benefit of AI, is I think we're going to end up for a lot. I mean, probably not me, but my 6 or 7 day work week is for sure down to a 5 day work week imminently. And I think for a lot of people, that 5 day work week will end up being a 4 or even 3.5 day work week in the not too distant future. So the upside of AI is that it could allow us to get everything done and then some that we've been getting done, but in 20 or 30% less time. And that would be, that would be great for everybody's health, right? It'd be great for stress levels. As long as all the money doesn't end up in the hands of a couple thousand tech bros, we should all be good. So don't vote in a way that sends all the money to 1% of the people, and you should be okay. All right, I'm going to let you go. I'll get a couple articles written here this week. And I think learn how to use these screeners the way that I've showed you over and over again. And remember to use the weekly rating. If you don't know what that means, figure it out. Use the weekly rating. The measures are at the end of the week, not the end of every day or every hour. And look for divergences. Look where there's an inconsistency, and then figure out, does that mean it's pointing up or pointing down? And you should be able to find some pretty neat opportunities. All right, everybody, have a fantastic day.